It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets for the trading session Wednesday, the 7th of June 2017. Please be sure to visit Trade Signal, signals and market updates from leading providers at www.tradesignal.com. You can certainly download the app at the Google Play and the Apple App Store. Okay, so let's see exactly how the markets are unfolding this morning. Certainly a slight roller coaster, and I'll certainly talk you through it. First of all, Asian markets certainly finish higher. The Shanghai up a whopping 1.2%, very impressive there. Hang Seng down though, so certainly takes a shine off that, whilst the Nikkei basically closes flat. We had US markets down yesterday as well, so again, a lackluster performance really was expected in the European session, especially given the fact that we had the news breaking with regards to Iran. A potential terrorist incident there, not actual potential, it was a terrorist incident there, with the parliament certainly being at the centre of this so-called crime, this evil ideology that's certainly destroying the world at present, whether it be London, whether it be Afghanistan, whether it be Pakistan. It's literally everywhere. It doesn't have a culture or identity, or no, it doesn't even have a religion, to be honest with you, even though they are trying to hijack one and justify it through that. Nevertheless, that's the status quo. Again, that certainly raises further concerns in the Middle East and the potential retaliatory measures from Iran. What will Iran do now, especially given the Qatar situation? So again, this is going to be interesting given the fact that we have this war, the Saudis versus the Iranians, and what's going to happen next. It certainly is a scary thought. Okay, so the Middle East is becoming a very dangerous place. And if that means dangerous, then it generally means that oil prices are going to be going higher. If oil prices are going higher, then that's going to hurt the global economy. So bear that in mind as well. Okay, so we had terrorism concerns. Okay, obviously the French terrorism incident yesterday as well. That certainly was weighing on the market. Also, we have Comey hearing now. I think some of the senators are due on today. And apparently Mr. Comey is going to say that Mr. Trump certainly was guilty as charged in terms of trying to influence and pervert the course of justice, and that certainly is risk negative. Okay, given the fact that Mr. Trump will lose a lot of political capital, and given the fact that this so-called infrastructure and tax plan or healthcare plan is nowhere near being passed, and he's certainly losing political capital, given the fact that he is being ridiculed now for attempting to troll Sadiq Khan, the actual mayor of London. And it certainly seems to be backfired. So everything is going wrong for this chap. His approval ratings are dropping to the basement. Okay, I think he's desperate now, and he is acting like a lunatic as he normally does, to be honest with you. Either way, certainly Comey hearings and risk negative, and it'll be interesting to see how that unfolds. German factory orders certainly came in weaker this morning as well. Also, S&P downside risks to UK growth. Sweden, Spain, industrial production on the weaker side. We had the potential bailout of Banco Popular. Shares suspended. Okay, certainly bought out. Again, whether that's risk positive, negative is debatable. Okay, I'm not sure how that can be risk positive if a bank is being bailed out. Nevertheless, that's the status quo at present. Okay, so you have concerns with regards to Qatar. You have concerns with regards to Iran now. And I think from my understanding of geopolitical events, that's very serious. And that certainly is going to be weighing on the actual stock markets. Adding the fact that you have UK election now within the next 24 hours. Again, that creates political uncertainty with the fears of a potential hung parliament. Certainly risk negative. You have the GBP USD above 1.29. Again, that's risk negative. So all those factors together, from my interpretation, is risk negative, and certainly looking for the markets to fall. Okay. Understand. Now let's look at the actual technical picture here, folks. Let's see exactly where we stand technically speaking. Okay, so looking at the German DAX here, first and foremost, daily chart at present held double top, so therefore remains weak. 60-minute chart, we did bounce up to 12,745 and we've subsequently reversed. 10-minute chart at the moment really is in no man's land for the German DAX, but having said that, we did have a ECB story, and again, these are only sources, nothing has substantiated or confirmed. We had a Reuters story running stating that the ECB would lower inflation forecast and thereby negate the argument for, well, certainly the theory that the ECB would have, the theory was that the ECB was certainly going to lay the groundwork for tapering, potentially September onwards, and given the fact that they're going to be reducing inflation forecasts, you can forget taper altogether. And apparently they're going to be blaming the drop in the price of oil causing that deflationary concern. Okay, so that certainly has helped European equities bounce, and as you can see here, we had a pivot low. We certainly gapped lower given the fact that we had US markets and obviously the situation in Iran and Qatar and the weaker factory orders from Germany and Sweden and was it Spain? Yes, Sweden and Spain. Okay, so again, you've had a short squeeze there on the back of that ECB report. The euro collapsing as well. If you bring up the chart, the euro USD, you can see the bearish engulfing candle. 60-minute chart certainly depicts that even better. Okay, now there's a possibility and a potential now for H&S formation to play out. Okay, so in terms of the German DAX, that's the status quo. The French CAC again pushed higher, closed the gap, held resistance at 5318. Okay, so holding resistance at 53818 on the French CAC. So an impressive thrust from the pivot low at 5250. We hit a pivot high of 5320. So a 70-point move on the French CAC on the back of that ECB report. FTSE 100 again very confusing. We had a pivot low here at 7507, 7506. Then we certainly subsequently rallied by 50 pips, 50 points for no apparent reason other than I can't really think of anything, to be honest. Okay, so again, we certainly rallied even though we had the Iranian concerns. We had the situation in Qatar. We have the situation with regards to Comey in the UK election as well. Yeah, it rallied. So for now, you certainly have support in this region here on the FTSE at 7510. We'll see exactly how the FTSE responds. You have resistance above at 7555. Very, very strange move with regards to the FTSE there. Okay, but nevertheless it occurred and we have to adjust accordingly, okay, in terms of the FTSE. Bear in mind though, the FTSE 60-minute chart has a H&S formation, okay. So from my understanding and my perspective, but the bias certainly remains bearish in the FTSE going forward, especially given the fact that Mr. Corbyn certainly has reduced the lead quite drastically, and he may even win the election, we don't know, okay. Either way, the best case scenario really is for a hung parliament and with Theresa May with a substantially reduced lead that she had hoped for, okay, and that obviously will have an impact on Brexit negotiations as well. So you have a rising contracting wedge pattern on the way to breaking south, and that certainly is bearish in my book. Okay, that's the status quo with regards to FTSE. Eurostoxx, let's look at the Eurostoxx last but not least now. The Eurostoxx again bouncing off that pivot support at 3540. Certainly bouncing, okay, certainly reversing quite sharply. 10-minute chart at the moment, you've certainly crashed into gap fill, which is at 3580. So again, watch out, 3580 gap fill. And then you have resistance at 3586 on the Eurostoxx. Now you do have support below at 3560, so we'll see exactly how the markets react there. Okay, so I think that's a good summation. Really, it's the UK election that will be dictating movements in markets now. So keep an eye on the UK election, and we'll see exactly how the market responds there. Okay, and also given the fact that you have a situation in Iran, again, massive uncertainty in the Middle East now, especially with Qatar, Saudi. Obviously trying to isolate Qatar, and then you have the Iranians backing Qatar, and then it really is crazy, okay, and that alone in and of itself should technically cause risk aversion and cause a sell-off on and especially given the fact that Qataris basically have a lot of money invested in the equity markets as well, so if they start pulling that out again, that is a risk negative. So certainly take that into account given the status quo. On that note, please be sure to visit cfds.com for your trading needs, okay, and certainly take advantage of that bonus. Goodbye now.